Good morning, everyone, and welcome. I'm excited to kick off today's presentation on RBI Relief for Exporters. On this first slide, you'll see the title, which highlights the focus of our discussion. We'll be exploring recent measures taken by the Reserve Bank of India to support exporters. Over the next few minutes, I'll walk you through the key initiatives, their implications, and how they can benefit your export activities. Let's get started. Now, let's move on to the next set of relief measures provided by the RBI for exporters. Starting with credit history protection, this is about ensuring that exporters' credit records are safeguarded, which is crucial for maintaining their creditworthiness and accessing future financing easily. Next, we have provisioning requirements, which refer to the regulations around how much capital banks need to set aside when dealing with export-related loans, helping to ensure financial stability. Then, reporting requirements come into play, emphasizing the importance of timely and accurate reporting by banks and exporters to keep the system transparent and well-monitored. FEMA relaxations are also part of the relief measures, providing temporary easing of foreign exchange regulations to support exporters during challenging times. Finally, the overall goal of these measures is to create a supportive environment that helps exporters navigate difficulties, maintain liquidity, and continue their operations smoothly. Each of these points ties back to our broader theme of strengthening export resilience through targeted RBI interventions. Now, let's talk about the eligibility criteria for the RBI relief for exporters. This is a crucial aspect because it determines who can benefit from these measures. Essentially, the relief is designed for exporters who meet specific requirements set by the RBI. The key points include the nature of the export business, the compliance with existing regulations, and sometimes certain financial benchmarks that need to be met. It's important to highlight that these criteria are tailored to ensure that the relief reaches genuine exporters who are actively contributing to the economy. By understanding these eligibility requirements, exporters can better assess their position and take advantage of the relief measures available. Overall, the eligibility criteria serve as a foundation for ensuring that the support is directed effectively, helping exporters stabilize and grow amidst challenging times. Let's talk about the relief provided by the RBI for exporters, specifically focusing on the moratorium on loan installments. This measure essentially allows exporters to pause their loan repayments for a certain period without facing penalties. It's a significant support mechanism because it helps ease cash flow pressures during challenging times. By granting this moratorium, the RBI aims to give exporters some breathing room so they can focus on stabilizing their operations and fulfilling their export commitments. This aligns with the overall theme of providing financial relief and fostering resilience in our export sector. It's important to recognize that such measures are designed to make the financial environment more manageable, especially during uncertain economic conditions. So, in essence, this relief helps exporters maintain their business continuity and stay competitive in the global market. Now, moving on to the next key aspect of RBI's relief measures for exporters, let's talk about working capital relief. Essentially, this is about providing exporters with easier access to the funds they need to keep their operations running smoothly. The idea is to ease the financial pressure on exporters by relaxing some of the usual constraints on working capital. This can include things like increased limits or relaxed criteria for credit. By doing this, the goal is to help exporters manage their cash flows better, especially during challenging times. This relief is crucial because working capital is the backbone of day-to-day operations, ensuring that production and export activities continue without unnecessary disruptions. Overall, these measures aim to support exporters in maintaining their competitiveness and resilience in the global market. Let's now turn to the section on export credit relaxations, which is a key part of the RBI's relief measures for exporters. Here, the focus is on making credit more accessible and flexible for those involved in exporting goods and services. The idea is to ease the financial pressures exporters face, especially during challenging times. The RBI has introduced specific relaxations to encourage and support export activities. These relaxations aim to provide exporters with more favorable credit terms, reduce their financial burden, and enhance their competitiveness in the global market. Essentially, these measures help exporters by offering easier access to credit, extended repayment periods, and relaxed collateral requirements. This not only helps in maintaining smooth export operations, but also contributes to overall economic growth by boosting international trade. By implementing these credit relaxations, the RBI is reinforcing its commitment to support exporters, ensuring they have the necessary financial backing to grow and succeed despite global uncertainties. This is aligned with the overall theme of the presentation, strengthening the export sector through proactive policy measures. Now, let's move on to Slide 7, which focuses on credit history protection. This is a crucial aspect of the RBI relief measures for exporters. Essentially, it's about safeguarding your credit reputation and ensuring that your credit history remains intact despite any setbacks. By protecting your credit history, you're maintaining your ability to access future credit at favorable terms, which is vital for ongoing export activities. The RBI has introduced measures to prevent your credit profile from being negatively impacted due to disruptions in your export business. This means that even if you face temporary financial challenges, your credit score won't suffer unfairly, allowing you to recover more quickly and continue your growth trajectory. In the context of the overall relief package, this protection helps you manage risks better and provides confidence that your credit standing remains secure. It's an important reassurance that supports your long-term business stability and helps you navigate any immediate financial hurdles more smoothly. Now, let's look at the provisioning requirements under the RBI Relief for Exporters. The good news is that these provisions can be reversed or adjusted by June 30, 2026. Essentially, this gives banks some flexibility as the economic environment improves. Additionally, banks and registered exporters are required to maintain at least a 5% general provision on eligible accounts, and this has to be in place by December 31, 2025. This requirement helps ensure that there's a safety buffer, which supports the overall financial stability of the sector. These provisions are a key part of the relief measures, aiming to balance support for exporters while maintaining prudent financial practices. It's an important step in helping exporters bounce back, but also ensuring banks remain resilient. Now, let's talk about the reporting requirements under the RBI Relief for Exporters. This is a crucial part of ensuring that everything stays transparent and compliant. Essentially, exporters need to maintain accurate and timely records of their transactions. They must report these details to the relevant authorities as specified by the RBI guidelines. It's important to understand that thorough reporting helps in monitoring export activities and ensures that the relief measures are being utilized properly. This includes submitting reports on export proceeds, payments received, and any discrepancies that might arise. Keeping these records up to date not only helps in compliance, but also simplifies the process during audits or reviews. Remember, clear and consistent reporting is key to maintaining the benefits of these relief measures and supporting the overall stability of the export sector. Now, let's move on to Slide 10, which covers FEMA relaxations. FEMA, or the Foreign Exchange Management Act, is a key regulation that governs foreign exchange transactions in India. Recently, the RBI has introduced some relaxations under FEMA to provide greater flexibility for exporters. These relaxations aim to ease compliance burdens and promote smoother international trade. For example, there have been adjustments in reporting requirements and permissible transaction limits, making it easier for exporters to manage their foreign exchange dealings. The overall goal here is to create a more conducive environment that supports export growth while maintaining regulatory oversight. These relaxations are part of the broader theme of RBI relief measures, which are designed to boost export competitiveness and streamline processes. So, understanding these FEMA relaxations is crucial for exporters to fully leverage the benefits and stay compliant with evolving regulations. Now, turning our attention to the relief measures provided by the Reserve Bank of India. They've introduced the Trade Relief Measures Directions, 2025, specifically aimed at supporting exporters who are currently facing global trade disruptions and higher tariffs. These measures are effective immediately, which means they're ready to be utilized without delay. They apply to a broad range of financial institutions, including commercial banks, cooperative banks, NBFCs, that's non-banking financial companies, including housing finance companies, all India financial institutions, and credit information companies. The key takeaway here is that these measures are designed to provide immediate support to exporters by easing access to finance and reducing some of the trade barriers caused by current global challenges. This initiative aligns with the overall theme of strengthening our export sector and ensuring that our exporters can navigate these turbulent times more effectively. It's a proactive step to bolster resilience and promote smoother international trade operations. On this slide, we're looking at the relief measures provided by the RBI for exporters when goods cannot be dispatched. Essentially, if exporters are unable to ship their goods, lenders have the flexibility to allow liquidation of those goods from various sources. These include proceeds from domestic sales, any legitimate alternative sources, or even proceeds from substituted export orders. It's a way to support exporters by enabling them to recover their dues through different avenues, minimizing financial stress. Moving on, the slide also highlights relief for impacted sectors through a loan moratorium. This means that for certain dues, there is a temporary postponement or deferment. Specifically, there's a moratorium on term loan repayments and recovery of interest on working capital loans. The key here is the timeframe. This relief applies to dues falling between September 1, 2025 and December 31, 2025. These measures are part of a broader effort to ease the financial burden on exporters and sectors affected by recent disruptions. They aim to provide some breathing space and support the overall economic stability. Remember, these steps are in response to the challenges faced, helping businesses manage cash flows better during these times. The source of this information is from the press release issued in 2025-26, which outlines these supportive policies. As we come to the final slide, I want to emphasize an important point about the nature of this presentation. What we're sharing here is meant for general guidance only. It's not designed to be definitive or to replace professional advice. It's important to understand that we cannot accept any responsibility for any loss that might arise if someone acts, or chooses not to act, based on the information provided here. So, if you're making any decisions that are significant, I strongly recommend consulting with a qualified professional first. Also, I want to clarify that the content we've covered is purely for educational and informational purposes. It's not intended as professional advice or a formal recommendation. Think of this as an overview to help you understand key concepts, but always seek tailored advice for your specific situation. In summary, while this presentation aims to inform, always remember to exercise your judgment and seek expert guidance when needed. Believe in yourself, and you will be unstoppable. This slide really captures the core of what we've been discussing today. Believing in yourself is the foundation of confidence and resilience. When you trust your abilities and value your potential, you unlock a powerful mindset. It's about recognizing your strengths, even when faced with challenges. Because, let's face it, the journey to success isn't always smooth. But if you maintain belief in your capacity to overcome obstacles, you become unstoppable. That inner conviction fuels your motivation and persistence. And remember, this belief is what propels you forward, even when doubts creep in. So the key takeaway here is, cultivate self-belief daily, nurture it, and let it drive you. When you truly believe in yourself, there's no limit to what you can achieve. You can also follow KnowledgeAlia on LinkedIn to stay updated with the latest insights and resources. This slide is presented by KnowledgeAlia, founded by SK Vijay, and you can reach out via email at vijx0201@gmail.com. I want to thank you all for your time and attention throughout this presentation. Remember, the key takeaway is to keep learning, connecting, and applying these concepts to make a real impact. Feel free to reach out on LinkedIn or through email if you have any questions or want to discuss further. Thanks again for being part of this session, and I look forward to connecting with you all soon.